Thank you, Chris. I hope everyone can hear me. This is officially my first AGRA webinar. I'm excited about it. We are working with technology, so I hope everyone can hear me and we got a strong connection while we spend the next 50 minutes together. Welcome to Farm Succession Planning, the kitchen table discussion. So a little bit about me before I begin. I'm a very blessed man, as you can tell. I'm very lucky. I have a beautiful family. I have 2 little boys and a beautiful wife. We live in southwestern Ontario. My wife is not holding her belly because we ate a big meal. It's because we are expecting our 3rd baby in November. We are really excited about it, and we're told by the doctors that this will be the first girl in our immediate family, so we're really excited. I'm a member of the Kitchener Rotary Club of Kitchener. Rotary is a massive globalized organization, 1.2 million members worldwide. It's been around for 110 years. If you see Rotarians out there, give them your support because it's a great organization. Farmers also are part of many great organizations. There is so many good news, good things happening out there around the world. We need to keep that going. Too often only the bad news gets shared. So let's keep up our support and keep the good things happening. Some people would think I'm sick, but I have a passion for economics. I want to learn as much as I can. This day and age, we're very lucky to have a ton of information at our fingertips, whether it's through your computer or reading a book or just going to guest speakers. So I love learning and want to continue to learn. Lastly, I'm an associate advisor at Lorkovic Wealth Management. Here, our team specializes in working with farm families. We love helping farmers make important decisions. So you might see us at trade shows or out in the community. Stop in, say hi. We're in the farm community and we want to be there. We want to be a resource for you guys that gets you guys important information. Like any good organization, I have to read you a disclaimer. So this presentation is for educational purposes only. It's for general guidance. Anything we talk about or any strategies we go over today, run them by your own professional advisors. I don't know you and your farm community. I'm going to talk about some strategies. My main goal today is to inspire you to think about your own farm succession plan. I don't want to get too technical. I want to keep things from a broad base and share some insights of what we've seen, but definitely check with your own professional advisors. I've met many farm families. We come up with a great strategy. They go to run it by their accountant or their lawyer or their banker and they say, hey, this is a great strategy. However, Brent didn't know this, right? And that's very fair. So while we're on the topic of who I'm not John Tavares, but I am very excited for the upcoming season. I am a Leaf fan. I think this is going to be a great year for him. That was a major addition. I hope I don't lose any of the West Coast viewers or any Montreal Canadian fans. But being a Leaf fan, I've also had to learn to have a passion for golf as well. But I will get used to making the postseason again. I am also, full disclosure, I am not a farmer myself. I wanted to be all growing up. I love farming. I wish I was, but I had the realization I am not handy. I am what they would call more book smart. So this here, though, is my father-in-law. He is a beef and cash crop farmer in Newstead, Ontario. I had to include him in the presentation because he always makes fun of me, saying that I'm not a farmer myself, but I work in the farm community. He thinks that only farmers should be able to help other farmers, but I like to prove him wrong because I definitely have a passion for farming. I just think for the safety of my children and others, I shouldn't be on farming equipment. So let's dive in. Let's take a look. Over farming in the past 20 years, there's been a lot of changes. I don't think these will surprise any of you, but let's first take a look at some of the decreases. So the number of Canadian farmers has decreased. There are fewer and fewer Canadian farmers. There's been a big consolidation in the farming industry. Interest rates have gone down. I got to be careful talking about the 80s, as I was born in the 80s. But all my research tells me that interest rates hit as high as 20%. When we look around the world today, there's even some economies that are experiencing negative interest rates. So that's had a big change in farming, and a massive amount of capital has went into the farming industry. Increases. We are living longer. It wasn't very often long ago we were building financial plans for people that would build them out to 75, 80. Now we're building financial plans counting on living off our resources till 90, 95, some cases even 100, depending on the genes. Farm cash receipts. Top line revenue growth from farmers is continuing year over year to increase, and quotas and land values have also been increased quite a bit. So farmers now are dealing with a lot more wealth than they were 10, 15 years ago. I know where we are in southwestern Ontario, majority of land prices are around 15,000 an acre. Some are even as high as 20, 25,000 an acre. So now I just want to ask you guys a quick poll question, because another thing that has increased is the number of farmers that are aged 50 plus. So the poll question here is, according to the 2016 Census of Agriculture, what do you think the percentage of farmers in Canada indicated they are age 55 or older? So majority have selected 70 or 80% have said 65. It's actually 50%. So over 50% of farmers in Canada are above 55 and older. So there's a big age demographic that are getting older, they're dealing with more wealth, and they have to make some important decisions coming up. So these important decisions that I'm talking about and that we want to talk about today are, the first one is, what is the future of my farming operation? So this is still while you're alive. You might be reaching that age of 60, 65, 70, and you're starting to think, is there something else I want to do other than farming? Or do I want to continue to grow? But what is the future for my farming operation? And the second one is, what if something happens? This can be a number of different things that we'll address. A lot of people right away think of death, but there's also other things that we're going to address that can happen in your operation that will directly affect you and your farming operation. When we put these two together, it kind of makes up estate planning and farm succession planning, a topic that a lot of people, I call it's like touching a porcupine. This is actually a hedgehog, so a lot of farmers don't want to talk about this. It might be because of their family dynamics. It might be they're just not comfortable even thinking about it. They can't think of life off the farm. Farming's everything they've known. So it starts off, I say, as if you don't want to talk about it, it's kind of like a little bit of a hedgehog where it's prickly. You don't want to talk about it, but the longer you leave it, it turns into this sucker. Then this big guy starts coming at you. And if you leave it long enough, eventually you can end up like this guy, where you got a face full of quills. So you definitely want to talk about this, start putting these plans in place. I've met too many families, our team has met too many farm families that haven't done the proper planning. And a lot of those issues just continue to magnify. So today I hope to give you some help to deal with those. So in part one, what is the future of this farming operation? We've all seen this. Most businesses have a life cycle. One thing that's interesting in life is we always expect things to be linear, a straight line up, and in reality they're not. Whether it's our relationships or our business, is sometimes it's a little bit of a roller coaster up and down, but with a growth line. So when we talk about what is the future of the farming operation today, we're going to really talk to more of the people that are in that expansion, maturity, redefine stage, where they're starting to take a look and say, okay, is there going to be someone else running this operation in my lifetime? So every farm will be transitioned at some point in time. The reason is we don't live forever. So it will either be done in your lifetime or it will be done through your estate at death. The redefine arrow, you'll see there's one that goes down. Sometimes in order for us to achieve our goals in life, the farm operation might have to take a couple steps back. So that might mean liquidating some assets to achieve our family goal. Top 3 reasons. There's usually 3 reasons why farm transition takes place. The first one is health. Farmers work very hard, as you know, and your body can only do so much. As we get older, we start to feel those aches and pains. So it's not uncommon for farmers to have their doctor say to them, hey, you got to take a look at something else. Your body can't keep this up. Your health is your most important thing in your life. Without your health, you can have as much money as you want. You can have the biggest farm operation you want, but if you don't have your health, it can really limit you. Number 2 is the death of an owner. This is obviously sad. It's not nice. We've met a number of farm families where one of the owners has passed away. Sometimes it's unexpected in a farm accident, or can be cancer or something else that has happened. And number 3 is a lifestyle change. I had a client say to me a little while ago, this was interesting, said, Brent, this is a livestock operation. That means our animals have to be alive or else we're not making money. And that means we're stuck at home 7 days a week. We do not get many holidays. We have a tough time finding hired help. We are ready to do something else. We've put our time in. So really, when you're looking at a succession of a farm, there's really, during your lifetime, there's really 2 ways it can happen. It could be a family transition. There are a lot of great tax planning rules or rollover rules in Canada to get your farm to the next generation. Or there can be a third-party sale. This can be a sale to your neighbor or a complete stranger that might be even switching provinces. But really, if you're going to transition your farm while you're alive, those are the 2 types that are going to happen. So today, what I want to try and go through with you is 4 key areas to consider. Whether it's a family transition or a third-party sale, I want you to start thinking about these 4 key areas in your operation. So the first consideration is your lifestyle. What do you want your lifestyle to look like? So often we meet with farm families, and when we ask this question and we say, what does the future look like for you? 5 years from now, what do you want things to look like? The first thing that comes out of mom and dad's mouth is, we want the kids this. And a lot of succession plans are driven by what the kids want. Don't get me wrong, I'm not saying that the kids are not important, but I want to encourage mom and dad, you guys are the ones that built this farming operation. So you need to think about what you want. Yes, your kids are going to be important, but does that look like more time with charity? It might be more time on the beach, or it could be spending more time with grandkids. But I encourage every farm owner in your life, and especially if you're married, include your spouse in this, sit down, have a glass of wine together, and talk about what you want your life to look like. Too many farm succession plans are driven by tax or some other motivating factor. Don't get me wrong, tax is important, but it can miss your total overall goal of what you want to achieve. So this is just, hey, you got a clean drawing board. What do you want to do in the next couple of years of your life? Next consideration is, what legacy do you want or don't want to leave? So here I'm talking about your family. So take a look, if you're thinking of doing a transition, write down your kids, write down your spouses, write down all your grandkids. What's important to you? Every kid of yours is going to have an individual need, right? So write it down and say, okay, how do we want to help them? If this is a succession plan to just one of your children, what are the other children going to think of it? So what's happened in Canada is farming assets have went up a lot in value, and the income doesn't always support a child buying us out of the family operation. So a lot of times if we want a child to take over the farm, we have to give them a discount. So it might be 30 or 40 cents on the dollar that child purchased the farm. Well, guess what? If I have 3 children in total, how do I help them as well? And it doesn't always have to be equal. That's totally right. But maybe there might be another way that you can help them or want to help them. We have a rule of thumb on our team, and that is, we want every farm family that if mom and dad were to pass away, that the children still get together for Thanksgiving and Christmas, right? So if you paint this picture and say, okay, how I've set up my assets or how I've done my transition, and I'm not here anymore, what's the likelihood of all my children getting along? A benefit of talking about this in your lifetime is that you can answer these questions and explain how you came to this decision with your family while you're living, and why you chose the way you did. Third consideration, sorry, I'm just going to get caught up here on my notes. This is, can our assets support all our goals and objectives? So in this consideration, you've thought about what you want your lifestyle to look like. You thought about your legacy. Now's the time to see, can you financially afford to do this? I call this financial mapping, right? So let's say a child is going to purchase the farm from you. How do they have the money to do it? Are they going to take on debt? Can the operation afford to do it? So this really comes down to the logistics of the transition. There's lots of professionals out there to help you with this. So this is where you're now going through your balance sheet, you're looking up, updating the wills, or maybe you're updating a shareholders agreement, which we'll talk about a little more later on. But really you're trying to find out, now, can all my assets do what I want to achieve? If you do run into the scenario where you don't have enough assets to do everything you want, rank them. Put what's your number one priority. Is it, you need $100,000 a year in income to be able to do the traveling you want or the lifestyle you want? Well, how important is that to you versus something else? So make a list, set them up, and then start seeing, okay, is this financially feasible to do? And once you have your plan in place, then it's time to start updating it to match what you want it to do. So meaning, do the wills have to be updated? Key consideration number 4 is, what professionals are you working with? Farm succession is a very hot topic. It's out there. There are a lot of great professionals to work with. I tried to find the nerdiest picture I could of an accountant, because these guys are numbers crunchers. They can help you with the financial mapping that I talked about. There are lots of people in the farm community that can help get you these answers. You're not on your own. You just have to reach out and start talking to them. So often what we do as business owners or farmers is we go to our accounting office and we drop off our year-end statements and leave. Well, it might be time to have what I call a proactive appointment. So this is where you're getting together with them and you're talking, what does the future look like? And they need to know, if you're planning a transition in the next 5 years, they can start helping you set up your assets to achieve that. It might also mean joint professionals working together. So when's the last time that you've had a meeting with your accountant, your lawyer, your banker, maybe your insurance specialist, all of those people together, because they're all going to bring a different angle to achieve things. I've seen lots of transition plans that are very tax motivated, but it might throw the family totally offside on a legal issue. So making sure that everyone that's important to you is brought to the table and addressing these of what you want to achieve all together in the best efficient way. Next part of this presentation, we're going to talk a little bit about what if something happens. So what do I mean by what if something happens? The first one that we're going to talk about is your estate plan. So if your will looks like this, you need it to be updated. I have met a number of farm families, and our team has, and we start asking them questions about the will, and we hear, oh, that document, that's about 20 years old, or we don't even have a will. Your will, as you accumulate assets in your lifetime, is a living document. It needs to be updated and reviewed every 3 years. It's not something that you just do once, tuck in a drawer, and it's done, because life changes, relationships change, things change over time, and you have to update it. You do not want your family looking like this. This is a picture that I'm making up the story right now, but is a family that's not getting along because something has happened, and to mom and dad, and the children are now fighting over the family farm. I can't use real names or real cases scenarios, but I've had a number of meetings now where we come in, our team, and the family is fighting because the will was not updated. It does not match what mom and dad had wanted. It was years old. I've seen it where 21-year-old children get control of farming assets way too early. They're not mature enough. And the whole reason for this is because the will was not updated or reviewed. So often as farmers, we're so busy running your operation, which is great, and you have what you want to happen in your head and your heart, but you don't update it on paper. So that's fine, and that's good that you want that, but it needs to be updated. Because guess what? If something happens to you, you're not here anymore to update it. So back to the polls. This is a nice one because there's no right or wrong answer. But when was the last time you reviewed your will? Okay. So majority are kind of in that 5-year range. Okay. We got 20%, I do not have a will. So right there, if you have children, if you have assets, go get a will. Do something, even a pre-made kit could do. I do recommend you get professional advice, but you need needs something. It is very selfish actually to die without a will, because what ends up happening is the court system decides where your asset goes, and it can really create a tough situation for your family. So some key considerations to your estate plan. So when you're reviewing your will, the first question I have to ask you is, do I have a will? So as we've talked about, it's obviously really important. But then my second point here is, wills are so much fun. Should I have two wills? So this is interesting, and this will depend on the province you're in. But I'm going to give you a scenario of why you would actually want to have two wills. So say I have $500 in my bank account, and I pass away. And my boss, Frank Lorkovic, who's a great guy, finds a will and goes into RBC where my bank account is and says, I am the beneficiary of Brent's money in the bank account. Please give me that $500. And the bank does, and they give Frank that $500. Another week goes by, and my wife finds another will that names her as a beneficiary. She goes into RBC, asks for that $500, and that money has already been given to Frank. So my wife would not be too happy with RBC. So financial institutions don't want to take on that risk. So what they do is they require the wills to be probated. What probate is where the court system determines that this is the last will that was created by Brent. Once one asset in your will requires probate, it drags all the other assets in. So meaning all my farming assets. So like I said before, say I own 100 acres at $15,000 an acre. If I don't have a separate will to deal with my non-probatable assets, those farming assets could get dragged in. Probate in Ontario is 0.5% on the first 50,000, and then after 50,000 it's 1.5%. So I generalize it as a 1.5% tax, but can be completely avoided if I have a second will. So if you don't have two wills, talk to your lawyer. There are only certain assets that are okay to go in a second will. It's called the multiple will strategy. So have a meeting with your lawyer and say, hey, does my will need to be updated? But two, does it make sense for me to have two wills? Definitely, if you own a farm corporation, those shares can be transferred through a secondary will. Next thing, when you're reviewing your will and your estate plan, you want to take a look at who does the work. So here I call this the executor. I believe there is a different name for it in Quebec, but really here, this is who is going to do the work. So I've actually seen farm families that have even planned it out as far as to say, hey, if something happens to one of the owners, we've even planned who's going to milk our cows, because those cows still need to get milked. Now that's going pretty far, but definitely you want to review this. Sometimes executors that we've named in our will have already passed away before us, so it doesn't do much good naming them as executor. Sometimes we name all our children join as executors, when in reality we think it might be an honor to them, or we want it to be fair, but they would actually prefer just to have one or two of the siblings do it. So I kind of got this rule of thumb that I go by. The first one is capability. I want to make sure that whoever I've named as executor can get stuff done, and that they're financially responsible. I would not want to name one of my children that can't manage their bank account to manage my estate. Next one is residency. Definitely you want them to be within Canada. Any type of planning, wealth management planning, tax planning does get more complicated when we are dealing with a US citizen, and you do want professional advice regarding that, but we want to make sure logistically that they can get around. So say I own a farming operation in Ontario, I would consider, if one of my children lives in British Columbia, do I really want them to be the executor of my estate? Now, we are in a day and age where you can get a lot of signatures online and information passed, but a lot of it still does have to be done face-to-face meetings. So is that child going to fly home from British Columbia to Ontario to get this done? And the next one is relationship. You want to avoid surprises. Relationships change in our lifetime, and you might not be as close to the neighbor as you once were. So you probably don't want him being the executor or being responsible for distributing your assets. The last really important point to consider is who gets the benefit. So who are receiving these assets. So one thing I strongly want you to consider is so often we name, let's say we have 3 farming children, we name 1/3 of all our farming assets to our children. And you want to be careful doing that, because say we're not around anymore, mom and dad, how are these kids going to make decisions? What if one of the farming children seems to be more involved in the farm than the other ones and actually working? So is he going to take the same compensation from the family farm as the other ones? Some of our non-farming children, they might not want farming assets. They'd much rather have cash. So we want to do some strong consideration and say, okay, who gets the benefit? One thing that I often run into is where we've named a charity as a beneficiary, and that's great. I love that idea. What I like to see though, and what charities like to see, is they'd rather receive cash, right? So I came across one will where it was naming 1/4 of their dairy operation to a charity. Well, guess what? That charity does not want to be an owner in a dairy operation. And the other 3/4 beneficiary, they do not want to be also a beneficiary of those assets as well. Like I said before, a lot of times we always want to figure out what are our objectives first. We want to figure that, and then we want to figure out how's the efficiency on how it's completed. Like I said, I came across tons of great succession planning, but it's very, very tax motivated, and we have to be careful with that. Taxes aren't necessarily a bad thing. It means we made money, but we definitely want to be careful if it misses our whole overall goals and could slow down that progress. Here I'm talking about how are decisions made between multiple owners. So here you'll see the Canadian Bill of Rights and a US Constitution. So governments have these things called the Constitution. It's how they make decisions. It's the rules of what needs to happen should an event happen. So if governments have them, corporations should have them too. So meaning, so say I own farming assets with my brother, how do we determine compensation, right? I'm not as worried about having a shareholders agreement or a partnership agreement when it's just husband and wife, but as soon as we add children into our farming operation, we definitely want to consider a constitution for our family farm on how things operate. What if someone gets sick? Or what if an owner passes away? How are these things dealt with? These things also are like your will and need to be updated. One consideration too is, say mom and dad own a family farm operation. You might want to put one of these in place with your will before you pass away. That way you've outlined how the farm's going to be run when you're not here anymore. Oftentimes part of a shareholders agreement is an agreement what's called a buy-sell agreement. And this agreement really deals with if one of the owners wants out of the business or is forced out. I'm going to go over kind of 3 key elements of what needs to be in those buy-sell agreements. So the first thing that has to take place is a triggering event. So there has to be a reason why this needs to kick in. So the first one can be death of an owner. If something happens to one of the owners, they need to know what needs to take place. Could be disability, divorce, bankruptcy, or what if one of the owner wants out? I've met a lot of farm families that after 35 years, it's time to split ways, and they need to have an arrangement in place of how to do it. I recommend to put these agreements in place while everyone's getting along, because it's a lot messier when not everyone's getting along. The key element number 2 is how do we come up with a value, a price or valuation? A common method that's used is we get 2 different appraisals and take the middle one. But so often, if we don't address this, when 2 business owners are splitting ways, they get in a massive disagreement. They might have farmed together for 30, 35 years, but as soon as it comes time to make a deal or come up with a valuation of the assets that they accumulated together while doing business, both parties feel ripped off. So outline this ahead of time, come up with a way to value the assets, and it's simple. When one of those triggering events happens, you pick what the option is, you go back to that agreement, and you start exercising on it. Everything is outlined there. The third element is, how do you finance this? So we've had the triggering event. We've came up with a way to buy one of the partners out, but how do we now finance it? One thing we don't want to do is cripple the operation with more debt. We have to be careful of that, right? There's only so much available that the operation can afford to buy out one of the partners. One common strategy is to use an insurance agreement, right, where you name insurance on each other. Now, that's not always applicable for everyone, but it is something that you definitely want to explore. So with that, is there any questions from anyone? I think, Chris, you were going to jump in.
Yeah, Brent, fantastic stuff. I'm not sure which made me sadder, the fact I don't have a will, the fact you're born in the 80s, or the fact that after all these years with RBC, you only have $500 left.
I can't give you the truth, Chris. It might have been less. So now you're making me feel sad.
This, like I say, this is something we talk about a lot here at Farm Management Canada at our Ag Excellence Conference every fall. I'm going to hog the question spotlight, and then I'll get to a few that came in. And something we were actually we were going to work on a few years ago was a toolbox, kind of like a workshop, to give people the tools to prepare them to go into that meeting that you described with the accountant or the lawyer. Do you have any tips on how farm families might prepare to go into that meeting?
Absolutely. And it starts with a conversation with the owners and really what they want out of their life. So ahead of time, like I said, so often, right? So I'm an investment guy. So if I go to a cocktail party, a common question that someone will ask me is, what's the hot stock to buy? And I hate that question because I'll ask them, well, why are you investing in the first place? Is this for your retirement? Is this to buy a car next year? Right? So really finding out, what do we want to achieve? A lot of us got into farming because we enjoy the lifestyle, and we're not necessarily money motivated. So I always encourage before that meeting is to really think of your life and what you want it to look like. And then take a look in the business. How can I match my business to what I want my life to look like? And then really, if you have that defined and you know what you want from what I call a high level, it's those professionals' job to bridge out the efficiency of it. So then they'll do their job and look into the technical things and find out when to use the capital gains exemption, whether you need to use the family farm rollover rules. But those are what I call more the technical things that they need to figure out. They can't answer for you what you want out of your life. So in preparing for it, I always suggest before that meeting, just have a couple of different ideas of what you want your life to look like. And actually, I'll add on.
Fair enough. I'm going to go.
Oh.
Sorry, Brent.
Yeah, no, I'll just add on that too. Ahead of time for those meetings, to be well prepared, have a copy of your last 2 years' financials, have your wills with you. If you have the multiple will strategy, take those wills with you. If you have a shareholders agreement in place, take that with you. So bring all that information to that meeting, and that way your professionals are well prepared for everyone's time.
That segues nicely into Patty's question about wills. She says there seems to be a tradition of not sharing the contents / intentions of a person's will. Can you comment on the value of sharing?
So does she mean like sharing it with your professionals?
I believe the way that I read it is sharing with each other.
Yeah, so I mean, definitely that's all private information that you want to keep. I do like sharing. I do encourage families when they've set up their wills and their estate planning to share it with the family, because this is your chance for your family to hear it from you how you came to that decision. So I've met farm families where dad has passed away, children are now beneficiaries of these farming assets, and the children are upset with the decision dad made on how he decided to leave the assets. Well, dad isn't here to be able to answer that anymore. So I always say, hey, while you're living, organize a family meeting. This is your chance to be able to tell them why you're leaving certain assets the way you are. Now, that is, every family dynamics are different. I did come across one farming family. They're a very, very large operation, and they are transitioning in their lifetime all their farming assets to one child, and they have 4 farming children. They do not plan to leave anything else to the non-farming children. But their main priority is that they want that farming operation to continue on growing as much as possible. So they called a family meeting. They let the rest of the family know who the successor is, why they chose that, and everyone was okay with it. They want to see that farming operation carry on, right? If mom and dad had to have taken assets out of the farming operation, it would have slowed down the growth rate of that operation. But I do think that if something happened to mom and dad and the children didn't know this ahead of time, they would have been pretty upset.
Thanks, Brent. Our good friend Roberta has asked a great question. How long should this take? Like, should it take a year? Should it take 3? Should it take 5? What's your opinion?
Yeah, so one is a transition plan during your lifetime. So say you're saying, I want someone else to run this farm operation. I think 5 to 10 years ahead of time is a really good time to start that type of planning. One is whoever the successor is going to take a long time to get trained. They're probably not going to be able to step in and do exactly what you can in the operation. Step 2 is there might be some planning opportunities from the tax side or legal side. So the earlier your professionals know where you're steering, the more they can match your assets to help you deal with that. So a transition plan in your lifetime, I would say 5, 10 years ahead of time. I also know that people that set goals and say, hey, by the time I turn 60, I don't want to be going out and walking my chicken barns anymore, or I don't want to be driving the tractor anymore. Those people are more likely to achieve it because they've set a goal and they've said, when this happens, this is what takes place, versus just saying, I'm going to do it and whatever happens, happens. So that's on a transition during your lifetime. But I would say, as far as your estate planning, your wills, those are things that I encourage people every 3 years, pull those out and just review them. They're living documents that you've got to really keep up to date, because life changes, and that definitely has to reflect it. So transition in your lifetime, I'd say 5 to 10 years before it happens, and your estate plan review every 3 years. Oh, Chris, you there?
Sorry, I was talking without my microphone on. Silly me. Fred follows up with saying that about 10% of families have a plan, which is incredibly low. So what can professionals like yourself and others do to improve this? How do you get families going?
A couple things. So that's interesting because I actually had a poll question of this presentation that I skipped over, and I had that stat in there. So thanks a lot, Fred, for bringing it up, because that is absolutely great question. Professionals like myself we're getting the news out there that this type of planning needs to take place. There are lots of professionals out there that just want to help farm families, and that's what we want to do with our team. So how we get that out there is doing presentations like this, letting our network know that we're there to help, and there are tons of people that are willing to help. So it really is just sharing and meetings. It's tough. It's never nice sharing the stories where things had gone wrong, but sometimes those are the most motivating. So our team meets right now between 2 to 4 farm families a month, and we've come across where we get called in too late to do this type of planning, where everyone is fighting. With that being said, I do always remain hope that relationships can be repaired. That take time, but the earlier you do this planning, the better. So definitely continue to get the word out there. And if you talk to a neighbor or you're at trade shows, ask them, What, maybe don't ask directly, what is your succession plan? Because that is quite personal, but you might want to ask, do you have a succession plan? Right? And really looking out for each other. And if you know someone hasn't thought about it and you know a good resource out there, get them in front of that person. So often we're scared to keep information to ourselves because we think someone always has an ulterior motive that, so I'm an investment guy. People will say, well, you just want my investments. No, I don't. I want what's right for you and your family. Sometimes investments make sense for farm families and sometimes they don't. But let's explore every option possible and then we'll go from there.
We have Anna here who's trying to get ahead of the game. She asks, she describes herself as a husband and wife combo, and they want to know how they might go about bringing their son into the partnership at a young age.
Yeah, so I'm always cautious on giving ownership. So you really, like, giving ownership's a big responsibility. I'm not saying not to do it, but I'm just saying make sure that they show the right steps. I've dealt with farm families where we're actually trying to reverse and get children off of ownership because they want nothing to do with the farm. So why are they an owner in the operation? So I would say make sure you know the operation, you know what you're looking for, and make sure that that child can do it. So make sure that they play an active role. I don't think it makes sense to give a child ownership just for the sake of giving ownership. It's really something that they have to prove themselves in. And two, a lot of the tax planning rules around dividend sprinkling have been cleaned up. So there really is no advantages that way. So just be careful with it because once you give them that ownership, they do have it and they can do things. Also, it changes. They need to have a valid will. If one of your children is a shareholder in your farm corporation or in your partnership, you want to update because guess what? They can leave that ownership to someone else. So you definitely want to make sure that you do the proper planning with that and make sure it's in good time. There is a sense of entitlement in the farm community where children do want farming assets quick. And I'm of the belief that you got to earn it, not be given it. So I hope that helps.
You know what? We saw my executive director and I were out at a conference recently, and one of the main bits we retained was one of the speakers said, just because you're part of the family doesn't mean you should be part of the business. So it kind of echoes what you're saying.
Totally.
Great question from Sherry. Would it be wise, or shifting gears a little bit here, would it be wise to appoint a professional, i.e. an accountant, as an executive for a complex farm?
Yeah, I do see that done a number of times. There's also trust companies that do it. I do like that idea of naming a professional. A lot of people are scared away because of the fees. So the executor does have a right to a percentage of the assets. But regardless if it's family or a professional, they also can get a percentage of that too. I believe that it gets capped at 5%, but I do want to double check on that. But yeah, I'd say the more complex, what you want to be careful though of is, say that professional is older than you. So what's the likelihood that they're still going to be around when something happens? So if you do name a trust company, a good part about a trust company is that the company doesn't go away. The people in the company might pass away, but the trust company is still there. So if you name the trust company as your executor, they're always in place. The other part is we've come across a number of planning where mom and dad want the assets to go in trust for the kids. They don't want the kids to get outright ownership, and this could be because the children have alcohol addictions or some spendthrift or different reasons why those assets might go into trust. But when you name a trust company, they'll abide by the rules and there's no emotional attachment, right? So if the beneficiary of that trust knows who the person is looking after and is constantly calling them saying, hey, I need money, they might emotionally release some of the funds, versus a trust company has no issue just saying, no, these are the terms that money can be released out of the trust, so here it goes. So, but definitely if your accountant's willing to do it, he knows you, he knows your farming operation. they're the professionals. I have no issue with that at all. That's a lot better than someone that's not capable of doing it.
So I'm going to tie a couple of questions together, Peter and Roberta. Peter starts out by saying, I'm assuming, high fees, accounting, legal, whatever, one of the reasons many people don't do this. And then Roberta flat out asked, can you give us an idea of how much the process might cost to give everyone, maybe the encouragement that they need?
Yeah. So couple things is one, anytime you're paying someone for advice, you need to be getting value out of it. I could tell you, surround yourself with professionals that are giving you good value, because that money that you're spending to have them guide you now can save you thousands of dollars down the road. So I've come across bad planning and it would trigger unnecessary tax. In one case, it would trigger $600,000 in tax for no reason that could easily be deferred or minimized. A good accounting plan came in and reduce that tax drastically. And yes, the bill was $5,000. So the question is, do you want to spend $5,000 to have a professional do it, or down the road have it cost you $600,000 if it's not set up right? So definitely the fees are out there. Everyone, if they're working for you, wants to get paid, but make sure you're getting value in it. And there are tons of professionals that will give you a ton of value. So the Income Tax Act in Canada has gotten very, very complex over the years. You want someone, so your farming assets have gone up a lot in value. You have a relatively high net worth. You want a professional helping you make decisions with this, because you make one wrong turn and it can end up costing you a lot more. So I have no issue with the fees as long as you're getting value out of it. And there are a ton of professionals out there that give you really, really good advice. Take your lawyer, for example. I've worked with farm families where there's no partnership agreement, no shareholders agreement in place. They're spending a lot more money now in court fighting over the family farm than they would have been if they would have just paid to get this agreement done years ago. So it's a little bit of money now, but it can save you a lot down the road.
Brent, we're gonna wrap it up here, but what we always like to do is the Dr. Phil final thoughts, and maybe you want to leave us with those, and maybe 1, 2, 3 bits of advice, however you want to sort of frame it, to leave a lasting impression on everyone watching.
Absolutely. So one, I apologize. This was quite a bit of information in a short period of time. Number two is I'm actually on holidays, so what you guys can't see is I have my bathing suit on from the bottom down below, so I just got the dress shirt up above, so I'm excited. Sorry it was short, but I'm excited to get back to my family. And no, this was a lot of information, but I just want to encourage you to consider some of this planning and to start thinking about it. The option out there is always to do nothing, and you can do that. But just know you're more susceptible for things to go wrong if you do nothing. So I hope this inspired you to think about your own family, your own operation. One thing that is maybe a little bit unique about the type of planning our team does is that we very much care about the people and what they want. We view your assets in life there to achieve what you want them to achieve. But first finding out, what do you want your lifestyle to look like? What are your family dynamics? Looking at things that way versus just saying my goal is to accumulate as much money as possible in my life and not pay any taxes. I think there's so much more to life to be lived, and really you just got to make the choice of what you want it to look like. I also do have one more slide. Our team does a semi-annual newsletter. Here, it's called The Intelligent Farmer. So we mail it out twice a year. We hand it out at farm shows. What this is a bunch of professionals getting together and getting farmers the information that they need. So if you want to get signed up for a copy, please call one of our team members, Farah. Her phone number is 519-747-1634. She'll add you to our mailing list. We'd love to mail you a copy. The whole goal with this is just to get you information. Life changes, income tax laws change, legal laws change, so we want to get you that information to help you make well-informed decisions. So, and the final closing thought would be, Your farm operation didn't get built overnight, so neither should your succession or estate plan.